Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib, and MBS Highway's created exclusively for Mortgage News Network, and it's brought to you by our friends at PRMG, working for your best interests. Well, quite a week. You know, when I told you 150 on the 10-year, so many people thought it was crazy, but isn't it amazing? Another target hit. Yes, 10-year dropping dramatically. Now listen, this has helped a lot by concerns about the spread of this awful coronavirus. More than 10,000 cases in China, over 200 deaths, and they may be understating the effects. But here in the U.S., some things happening here where the first human-to-human transmission happening, not just people bringing it from China and happening there, but somebody spreading it here. And that's a big concern because there's a lot of analysts predicting that this could take its toll on businesses. Just think about it logically. You know, if you are fearful of this, and you see so many people already with the masks, if you are fearful of this, then do I really need to go to that movie theater? Do I really need to go to that restaurant? Do I really need to be in places where we're congregating? And that could slow business down. So this is still early. Let's just pray that they come up with some way to curtail this, or that this really slows down. But for right now, it is a big concern. And in fact, the World Health Organization now saying it is a global health emergency. And obviously that did impact stock market last week. Now, good stuff last week happened with appreciation. Case-Shiller came out with their levels of appreciation. This is the gold standard as far as appreciation goes. They use actual homes and track the homes, and they could see what the changes are around the country. And they've said that home prices appreciated at an even higher level. So they accelerated in their level of appreciation to about 3.5%. And that will probably continue because of the lack of inventory. Now, even in the major cities where you have elevated home prices, those levels of appreciation accelerated. And that's important because that's been the area of the housing market that those higher home values, which were really lagging and slowing. So look, I've been saying this for a long time. The housing market will remain strong because of so many factors, predominantly demographics, but we are seeing continued strength in housing, lack of inventory, more household formations coming. Been telling you about this for a long time. So many people in our industry and people in the media were so negative on housing for so long. All of a sudden now, after telling people not to buy a home for the past 8 years, now suddenly they're all coming around saying, oh, the housing market's pretty good. Well, glad you're just waking up to that right now. It's going to continue. With regards to this week, jobs week, and that's going to have a big impact. So I don't think that some of this virus scare will have taken its toll, but there is something that you should know. So in the last jobs report, we saw a deceleration in weekly earnings. Now the media looks at hourly earnings, and of course that's an important component, but I think it's more important to look at weekly earnings, because what if somebody's working more hours or less hours? I think that's what's important, is what they take home, what they could spend. If I'm making more per hour but working less hours, I'm taking home less, and that means I have less that I can spend to help the economy. And even if my earnings per hour aren't going up much, but my hours worked are going up, I have more money to spend. So we look at weekly earnings, and that decelerated. And last week, the employment cost index, used to be Alan Greenspan's favorite measure of the economic conditions, this one showed a deceleration as well. Is it an anomaly? We'll see this Friday. All right, so some levels for you to look at. 150 will be a big one on the 10-year Treasury. I think it would be difficult to get under that, but we potentially could, and then we'll test those 140 to 144 range, which is going to challenge some of the all-time lows. Remember I said 1.39 was my target, and so many people saying, oh, the next move is to 2.5%. Well, look, we're knocking on the door of that, aren't we? Less than 15 basis points away from those areas. This is pretty remarkable to see what has transpired. The other thing is look at the yield spread. The 10-year versus the 3-month, it's almost flat. So we're almost looking at an inverted yield curve once again. This is after the Fed cut rates 3 times, and they've been pumping in like $100 billion a month into buying treasury bills, try and elongate or widen the yield curve, just persistently pushing down on longer term yields, even after all the things we've seen. So this should be an interesting week ahead, especially with the jobs numbers. It could be one where you see record-breaking low rates. Hope you have a great one. Talk to you soon.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS highway trial.
This is Mortgage News Network.